Hello traders, you're welcome to this video. In this particular video, we are going to be discussing the CCI indicator. The CCI is short for Commodity Channel Index. It is a versatile indicator that helps traders identify overbought and oversold conditions as well as detect trends and reversals. Okay, so basically, we are just going to be breaking it down in this video to see how the CCI works. Right, we're going to be seeing how to use the CCI indicator. Now let us just add it to our chart. You go to oscillators and then you go to commodity channel index. Okay. Now you might just want to use the default settings. Let's just use the default settings that we'll find there. Okay. Now the CCI indicator typically fluctuates between values of plus 100 and minus 100. You can see fluctuates, although we can see that there is some extensive movements below minus 100, above plus 100, but the main point of action usually happens around this minus 100 to plus 100. Okay, but here is how you should interpret these levels. Above plus 100, above plus 100, right? It indicates overbought market conditions, signaling that the price might be too high and a potential reversal or pullback might occur. So all these times that we saw price rise above plus 100, it was indication of overbought and possible reversals. Now below minus 100 shows oversold market conditions, signaling that the price might be too low and a potential rebound or upward movement might be near. Okay, so these levels give a clear indication of when a market is in extreme conditions, and it can be used to time entries and exits, right? How do you spot overbought and oversold levels, overbought and oversold conditions? Overbought conditions, I already explained it. When the SCCI crosses above the 100, you might just want to look for an opportunity to sell when that happens. So you can see that right after this happened, this is just an example. You can see that as the CCI began to point downwards, you can see at this point, the price was still going up. It was still going up. But when it finally crossed below the plus 100, that's when your sell signal comes in. Okay, so do not just be quick to sell after the price enters overbought. Wait for the CCI to cross below the 100. That's where we would have sold, and you can see that price sold all the way to this point, right? Now this is another example to buy. This is now for a buy signal. You can see right after the CCI crossed above the minus 100, that was when the assets began to rise. Okay, you can see another example. It was after the cross. Here it was after the cross. So the cross should happen before you buy or sell. Okay, now how do you detect hidden trends with CCI divergence? Now divergence occurs when the price is moving in one direction and the CCI is moving in the opposite direction. We already talked about divergence in previous video, but since we are dealing with the CCI indicator in this video, let's just touch divergence a bit with the CCI, right? So a bullish divergence occurs when the price is making a lower low, but the CCI is making a higher low. When price is making a lower low, but CCI making a higher low, this suggests that the downward momentum is weakening, right? The downward momentum is weakening and the bullish reversal may be coming. And you see shortly afterwards, the price went up for a bit. Now for a bearish divergence, it's just the reverse. When price is making a higher high and the CCI making a lower high, okay, in that case now it signals that the upward momentum is fading and the bearish reversal might occur soon. Okay, so it's just the opposite. Now for the indicator settings, okay, the default settings for CCI is typically 14 or 20. Now this means that the indicator will compare the current price to the average price over the last 14 periods. That's if your period is 14. If it is 20, it will be over the last 20 periods. If it is 50, it's over the last 50 periods, depending on the settings you are using. Okay. However, a lower period makes the CCI more sensitive and reactive. while a higher period smooths the indicator out and reduces the noise. For example, if you're using period 30, a higher period, watch out for what's going to happen here. You can see it smoothens out the price, the indicator, right? So if you want a quicker reaction to price, you might want to use a smaller period. But if you want a slower reaction to price, you might want to use a higher period. Okay. Now, how do you interpret the CCI signals? You might want to use the CCI in combination with price action, please. If the CCI is above the plus 100 and the price is trending upwards, okay, it can confirm a strong uptrend. Likewise, if the CCI is below minus 100 during a downtrend, it confirms strong bearish momentum. If in overbought conditions and you see price is above plus 100, do not enter sell immediately. Try as much as possible to wait for the CCI to cross below the plus 100 first. And you might want to use support or resistance levels as well, just for extra confirmation. For example, now you can see that when the CCI crossed below the plus 100, price was already around the resistance zone. So it can add as extra confirmation. So try as much as possible to use support and resistance levels, use trend lines, and you can also add on other indicators for additional confirmation to reduce false signals. Okay, and always make sure you observe good risk management and good risk to reward ratio. I hope you found this video insightful. Kindly like and subscribe for more trading insights. Cheers and happy trading.